The Federal Reserve just cut interest rates for the first time in 2025, and the president is already calling for more. The real question is, what does this mean for you? How does this affect your wallet? Is it going to cost you more, or is it going to save you money? In this video, let's talk about the Federal Reserve. What do they do? How do they affect the economy? And what does it mean for you? This is Journey to the Bag. First, quick crash course. What is the Federal Reserve? The Federal Reserve, or the Fed, not to be confused with the get on the ground feds, is basically America's central bank. Their main goal is to keep the economy balanced. And the way they do this is through two things. They want to focus on keeping prices low so inflation doesn't eat up your paycheck, but also keep people employed so that the job market is healthy. How do they accomplish this? Through interest rates. Think of them like the referee for the economy. They basically blow the whistle when things get too hot or too cold to try to keep everything in check. So why the cuts now? All right, two reasons. Number one, job growth is slowing. Fewer jobs have been added this year than expected, which signals a slowing economy. And number two, investors, even the president, have been loudly demanding for lower rates, hoping that it'll spark growth before the economy stalls out. So, the Fed dropped the rate by 25 basis points, which is 0.25%. Now that might seem small, but that change right there could have a ripple effect through the economy. They made a cut to the federal funds rate. What is that? The federal funds rate is the rate that banks charge each other for overnight loans. It's the interest rate that other banks pay to borrow money. And that's a ripple effect, because if the banks can borrow money at a cheaper rate, then everything kind of trickles down. When the rates go down, borrowing money becomes cheaper, so that your refinance, your car loan, your credit cards, all of these interest rates can come down. It doesn't happen overnight. All of it follows the 10-year treasury bond yield. So let's say your federal funds rate is at 4.25%. Typically what you'll see is mortgage rates will be 2 to 3% higher than that. So the lower the federal funds rate, the lower those interest rates on everything else that you purchase come down. That small change of 25 basis points or 0.25% could mean huge savings on a loan over a period of time. Think about it like this. If you bought a $400,000 home and got that 0.25% decrease on the loan, you could save $25,000 over that 30-year period. $300,000 house, you could save $18,000 over that 30-year period. Think about where that's going. When it comes to jobs, if companies can borrow money at a cheaper rate, then they can afford to hire more people. They can afford to invest more, build their business out, grow. So if companies are growing, there's job growth, and that's how interest rates affect the jobs. How does this benefit you? All right, if rates are lower, you might be able to refinance your home and get a lower rate, saving you money over time. You might be able to purchase at a lower rate, saving you money over time. Usually when rates are lower, more money is flooded into the market, so investors might spend more money, purchase more stock, and boost the overall economy. And lastly, if you have high interest debt, lower rates could give you a little bit of breathing room. But rate cuts aren't all sunshine and rainbows. You gotta have balance. If those rates come down too low, then inflation can heat up and everything gets more expensive. Groceries, the price of your eggs will go up. And savings rates come down. Those high interest rates, people depending on those savings incomes can get squeezed. And it also weakens the dollar. So if the economy is weak, then lowering the rates doesn't fix those deeper issues. Bottom line is the Fed is trying to boost the economy. For you, cheaper borrowing, maybe some job growth, that's the hope at least. But if everything's not controlled properly, inflation could run amok. You have higher prices, everything will get more expensive. What do you think? Should the Fed drop the rate some more, or is this becoming a little bit too risky? Drop a comment, like the video, share the video, Hit the subscribe button, bell notification so you get notified. You know, as always, the world is yours. I catch you on the next one. Peace.